sell-off we've seen recently in growth stocks, and I look at some stocks that are hitting new highs amid this broader market sell-off. You characterize this, Bill, as hot money exiting hot stocks, and right. I guess this is the Mag 7 and the tech sector, correct?
Yeah. So, and I don't want to going forward. We might have actually had a significant pullback, but just understanding this and just putting it in a little bit of a historical context. Always, what the idea was is tariffs come in and the economy slows down, or the global economy historically would slow down. The stock market comes off, and if everybody's nervous about what's my economic outlook, they park money in the U.S. and the U.S. dollar goes up. So slow down, dollar up. This is dollar down, stocks down. So this is very unusual. What is happening here, and just making sure we understand it, and then we can figure out what we want to do going forward. And so really if we're going back 6 months ago or even last summer, you could always say, well, China's uninvestable. And then you've got private equity. Oh, I don't want to put money in that. Venture capital is not investable. And then real estate is where everybody just parks money. And then, oh, I don't want to put any money in real estate. The stat that came out, this I believe is a Goldman Sachs research number, of global savings last year, 70% went into the U.S. in U.S. stocks. Like, it's one saying that the air is coming out of the balloon, but it's just how much money went into the U.S. and into U.S. stocks. And so now people just chasing that, and now it's literally just like whatever the trigger is sort of Germany's going to inflate, Germany's upping their interest rates, boom, I want my money back. Yeah. And so the two triggers are you're taking the money out of those stocks and out of the U.S., and stocks down and U.S. dollar down. It's just to understand what we're doing and how unusual this is. There's a long, long time to go, and we're seeing these big European numbers up. But we've also got a slide that we keep in our desk. In U.S. dollars, in our terms, you have made no money in Europe for a decade. Nothing. So you're also pushing the balloon underwater. There's nothing particular, there's still companies that are making money. Yeah. And so now you've just changed the psychology where all the money went in this side of the bathtub, and some of the money is just flowing back out. It's just understanding that that's where we're at.
What do you make of the rally in European stocks? As we noted, they're leading the developed world so far this year in a fairly big way.
Yeah, totally. Well, now that hot money's got to go somewhere, and it's rational for it to go there. We don't have any particular name saying, oh, I've always wanted to buy this company. Really, what we're doing is we're sitting on our hands. We've got a certain amount of cash. There's businesses we like in North America, U.S. businesses that we're waiting for to get a good price. If you had to be in something today, you would take your money, your hot tech stock, and you would go try to find something in Europe and go chase it. That's just not what we do.
Okay, you mentioned a couple of stocks to us that have they don't look like they're trading in this current market environment. They're hitting new highs while the broader indices sell off in a big way. Here's one that we showed viewers at the top of the program. AutoZone is ticker symbol AZO. It's a big U.S. auto parts retailer. I believe you hold this in client portfolios, correct?
Yeah, everybody has this one, and I think Bryden Teich has been on here a number of times talking, over the years talking about AutoZone. It's just a very efficient company. It grows incrementally, profitable, buys back stock, all those kind of things that mechanically, make it a great business. So it's done well over time for us. But also in this environment where everything slows down, it's not sort of that shiny tech stock that everybody wants to chase. But also with the economy slowing down, it's a place where Americans have this fascination with cars. Most Americans have like 2 cars, and a lot of people have 3 cars, and they tend to fix them themselves. Yeah. And when the economy slows down, they will go to an AutoZone or O'Reilly's, and they'll actually go fix their cars. So it's very interesting. We get this sell-off, and these type of businesses which are sort of recession-proof business, doesn't mean you can't have a recession to the point that it hits AutoZone. But as of today, it's just very interesting that when we've had this sell-off, AutoZone goes and makes a new high.
Okay. Would you buy AutoZone at these levels for
we added to it. It was sliding, so we're just holding on to it.
Okay.
It's hard to recommend here. You do get there will be a chance at some point this year, I imagine.
Okay. We've run out of time, but I want you to speak to us briefly about the other stock that you flagged in this contact, BJ Wholesale.
Yeah, exact same model. It's just when things slow down, people actually will be going to BJ's Wholesale Club as opposed to going to an exotic place like Target.
BJ Wholesale, ticker symbol BJ in New York. That stock also at a multi-year high. There, you see it right there. That's Bill Harris on